every investment, even non-investment, is also a risk. Without human beings or without people, there's no multifamily. Hello everyone, we are here again for another episode of our asset management series. Today I decided to discuss multifamily risk because most of us are active and also passive investors in multifamily. So it's important that we identify what is risk and how we can mitigate them. The purpose is for you to understand that every investment, even non-investment, is also a risk. If you're not investing, it's a risk of you losing your money to inflation. It's a risk of you losing your money to buying things that are irrelevant and all that. Investing in multifamily is not a bed of roses. Recently, we've all been tuned into hearing very good things about multifamily, but most people are not discussing about the challenges or the risks that are involved in it. So today, I'll be addressing 6 different categories of multifamily risk that you need to identify and weigh the option and see if it's something that you should still continue to do on a deal. The first risk I want to discuss today is the market risk. Let me explain what that is. It's for you to understand the economy fluctuation and know how the market is reacting to the multifamily. So if you've listened to some of my videos, I talked about when you are buying a property, some of the things you need to identify or look at before you narrow it down to, okay, yes, this deal is good for me. And one of it was the market. So before you buy a property, there's the market risk involved. And lately we've seen that happen. The market risk we've been seeing happening is the inflation. We've seen inflation taking a serious hit in the American market, and that has really affected a lot of things. We've seen labor go high. Invariably, if you're supposed to do capex on some items, maybe it was supposed to cost $40, we are seeing it double or triple because due to the inflation. So market risk is a very, very important factor that you need to look at. How is the market reacting? Is this a good time for me to buy, or is it a good time for me to sell? Is it a good time for me to manage? Is it a good time for me to build? We've noticed that building, people that are doing new construction, since last year, they slowed down on the construction projects. It just recently, I'm seeing the construction project coming up again. And that's because maybe interest rate is coming down. But when you're about to do a new build or new construction, the market plays a very large factor. You need to identify factors like your interest rates, because remember, this is a bridge loan to keep going high if the interest rate is not fixed. You need to also consider the labor that will be involved in it and the material cost that will be involved in it. Not just that, apart from the market risk, another thing you need to consider is how is it affecting employment? How is it affecting relocation? Okay, when I mean market risk again, I'm talking about, you can see people migrating. For the last 2 years, we've seen people migrating from different states to other states, maybe due to low cost of living, due to they just like the policies or the law in that state. Now we're even seeing people leaving states because of abortion rights and all that. So you might think that these things do not affect acquisition or exiting a property. They play a direct effect on your deal on multifamily, because really without human beings or without people, there's no multifamily. So it's really dependent on the people around it. So these are things you need to understand. These are the risks involved in buying a property. That's why you have to do your market research. That is the first thing you need to narrow down on before you do anything. Now, the second risk is the tenant risk. And what does that involve? Now, there are new policies coming up as we have a new president coming, and his first job that he said was going to do on day one was to start deporting people. You know the number of illegal immigrants in the country. There are so many, and these people, they are not living under the bridge or they are not staying on the road. They are in some of the apartments that we currently have. So these are risks that are in multifamily, and you need to also address. Some tenants might have a loved one that is illegal and will have to leave the country, and for that reason, they might have to all relocate back to their country. And we're also seeing companies downsizing. We're seeing people losing their jobs. Like a month ago, unemployment rate rose to about 4.3% or 4.1%. Last week, I think it was 3.9 or 4%. It's very high. 1% of any unemployment is about 1.67 million people that are employed. So you need to know that tenant risk is very real, and it can happen through different ways. You need to consider that people are losing their jobs. It's also going to affect your rent collections. There might be high delinquencies. You need to see how that factors into your business and all that. The next one is operational risk. We are seeing this play out significantly. Operational risk basically comes from whoever is managing your operations, and the person managing your operation is the property manager. We've seen unseasoned property manager or inexperienced property management company, and if you're not on top of it, their inefficiency can affect your entire 1 year or 2 years, or in short, your entire business plan if you do not kick them out on time. There are some markets that we have uncooked, unbaked property management companies. It's very difficult for you to get good property management company in some markets. So you need to be very, very careful. Are you ready to train and groom them? Like one of the markets we are in, there were a lot of issues about getting property management company in that market, but we had to get the worst of the devil. Let me put it that way. And we had to train the worst of the devil to become what we wanted. You understand? There's some markets like that you don't get the kind of quality property management company you're looking for and all that. So you need to weigh that factor as well, because if you don't have the right people managing it, then you're in trouble already. You might end up flying down every weekend to see what is going on in your property, and you don't want to be doing that. That's not the idea of multifamily at all. The next one is the financial risk. I explained this in the last episode before, the one that we won the property management team, the one that we were discussing capital stack. The financial part of a deal is very crucial, and people don't really understand it. Most of the deals that are falling apart, like there's a deal that I invested in with a friend. It's not my deal, it's somebody else's deal. I invested with her years back. They did a short sale. The deal was bought for 15 million and they sold it for 10.5 million. So 4.5 million was lost in this deal, and it was due to financial risk. How do I mean? They took a bridge loan, and the bridge loan was due July, and they bought it too high. It was not hitting the refinance amount. In order for them to refinance, that means they have to bring money. That means they have to do some cash call from their investors. So they called all the investors and asked for cash, and the investors said no way, they were not going to fund it and all that. This alone, the risk there was as involved of the debt, the loan on it. So you need to understand what kind of debt is applicable right now. There's nothing wrong with bridge loan. Please don't get me wrong. It's a very good way of exiting from a property. Like if you have a value add, like a big value add property, you want to change the roof, you want to do so many things, and after doing it, the property is going to increase value. Bridge debt is the best debt for you to do, but you need to understand the market. That's why I started first with the market. You need to understand the market. What market are you playing at that point in time? So for a market that is low, like the interest rate was at 0 2 years back in 2022, 2021, that was a very wrong time for you to take a bridge loan, because that is the worst or the best it can ever be. The next thing that will happen is that your interest will start going up. So if you study the market and you have a deal, that would not have been a good time for you to have taken a bridge loan. Now, in this kind of market where we are, this is the right time to take a bridge loan. Let me tell you why, because we are up here in the loan level as an interest rate is this high, and right now the Fed is bringing it down gradually. So going forward, the interest rate has gotten to its peak, it's coming down. So if you've taken a bridge loan at this point, that means in 2 years when you are refinancing, it's going to be somewhere here. So that means the debt you are refinancing from is going to be lower than what you started with. But rather, people were going from when it was this low, they were collecting bridge debt at the lowest point, and interest rates started going. And that means when you're exiting, you're going to exit at a very high interest rate. So that was the problem most people are having. So you need to understand the financial risk when taking a loan. That's one. Another one is the leverage. How much leverage are you taking? Those things can also affect your deal. It can affect your cash flow. It can make you indebted. You'll not be able to pay off all the loan you owe, and it can make your property unstable. So financial risk is very, very key. You need to understand it. Legal and compliance risk. So I forgot to mention this. One of the reasons why they decided to sell, apart from having the loan issue they could not refinance, was they had a lot of compliance issues. Every year, I'm in Dallas, I don't know about any other market, but in Dallas, when you buy a property, every year the city comes to do a random inspection. They want to see if you're in compliance. But guess what? The more you own a property, the more they're losing up on you being compliant. But the moment that property is transferred to a new owner, they take the standard this high. Issues the previous owner was able to avoid, a new buyer will not be able to avoid it. You will go through the entire process. They will go through your entire property. They will do a thorough inspection and come back with legal and compliance issues that you need to face. And some of them you might not be able to solve, some of them you might be able to solve. So when you are doing your inspection, doing your due diligence, these are things you want to identify. What are the major hazard compliance issues that I know I'm going to face are these big issues? Is it worth buying the property or is not worth it? Or can I put it under my CapEx budget and rectify it once I buy it? So in this case, in the property I was referring to, it was beyond them. It was a lot of money they had to spend to be in compliance with the city. So that was one of the reasons why they had to sell and all that. So legal and compliance issue are real issues. You need to know what are the, imagine you buying a property that maybe it's not properly zoned, maybe it was not, maybe it was for business and somehow they were able to make it a multifamily and the zoning effect came into play and all that, then you should know you're in trouble. So property code, zoning, these things are real issues and you need to check them before you buy. Then the last one is exit strategy risk. Some of you will be wondering, how is there any risk in exiting? Yes, there's a large risk in exiting, and the risk involved in exiting is you need to identify the period. Like I said, the market is around the entire thing I just mentioned. The exit rate, you need to identify how is the market at that point in time. Is it a good time for me to sell? Is it a good time for me to refinance? Is it a buyer's market? Is it a seller's market? Should I hold it a little longer? These are questions you need to ask. At the time of exit, you are like, oh, my capital gain is a lot. If I exit, I'll be slammed with a lot of taxes. Do I want to do that? Or should I exit at the end of the year or at the beginning of the year? These are questions you should be asking and all that. And you don't just ask those questions. You can ask them with your CPA, your accountant, to know when is the right time for you to exit and what you can do to exit properly. Because if you don't exit properly, you'll be slammed with a large tax returns, especially if you've made large profit, capital gain on the property. So these are questions you need to be asking and be talking to the right people and know the exact time to exit. Earlier this year, I gave you guys an example of a property they wanted to sell for 11 million, and that was in 2021 or 2022. They wanted to sell, no, 2022. If you're laughing, they wanted to sell for 2022 11 million, and the guy was in best and final. I was at 10.5, another person was at 10.8. We're just two people. Two of us wanted to buy it, and all of a sudden the seller came and said, I'm not selling, I want to wait out the market. I will sell 1 year after. Okay, we all went, we left him. 1 year after, they brought back the property. Guess how much this property was worth? 9 million. Even 9 million was like, it was not an interesting deal. Like, you have to just take it and just say, okay. So you have to understand the market to know when is the right time for me to exit. If not, you might lose money or you might gain money. That is for that. So now the next thing I want to talk about is,
So, Bibi, let me ask you an example. So,
yeah.
to the people in the room, how are they looking at these market trends, or where should they be looking at these market trends so they don't become that seller?
Oh, yes. The market trends right now is still a buyer's market right now. And the reason why that is because of the interest rate. And secondly, the economy. And thirdly, some deals are under the water. So they just want to exit. So we have a lot of properties outside than buyers at this time. It's not something that will continue for too long. In 2 years, once the interest rate comes down and all that, I don't see that happening. So if you want to buy, I think this is the time for you to buy. Some of you that listen to podcasts, this is the time to buy. You've been hearing it and hearing it. This is the best time for you to buy. And that's the truth. And because it's the buyer's market now. Before we know it, once the interest rate comes down and all that, it might become a seller's market. And that would be the right time for anybody to sell at that time. Once that happens, once interest rate comes down and all that, it's a good time for you to refinance. It's a good time for you to sell. Studying the market at every point in time is very, very important.